Maker is about to ship almost like 3 years of product that they've been developing. And it's going to drive more DAI into the system, which is going to drive increased, DSR, which is going to drive more distribution of the protocol itself, which will drive buybacks to the Sky token now.
Who's going to be the arbiter of truth, and how are we going to decide if that needs to be something that needs arbitration in general, or is this going to be an open platform?
I think it's completely valid to be worried about governments cracking down on what people can say and sending cease and desist letters to, Donald Trump and Elon Musk, who are just having a Twitter Spaces together. I mean, hey everyone, this episode is brought to you by Namada, the shielded asset hub rewarding you to protect the multi-chain. So not only can you protect your own data across any asset and any chain, but you also get shielding rewards for strengthening data privacy protections for everyone. So you can check them out at Namada.net and follow their mainnet launch. Stick around, you're going to be hearing all about them later in the program.
All right, everyone, welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer: the views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone, welcome back to another Roundup edition of Bell Curve. We got Michaels 1 and 2, Vance. Vance, how we doing?
What's up?
Doing well.
Hack game strong. Vance, how's the Open last night?
It was good. Saw Carlos Alcaraz lose in the second round, which is pretty shocking. But yeah, I mean, everyone's having a good time. It's heading into Labor Day, a little tennis. Feels nice.
Nice. You're saying that name like I should know who that is, but
he's like the world number one tennis player right now. He's 20.
Don't worry, Mike. He's just the best in the world.
He plays sports ball, right? That's what he does. That's awesome. Well, let's all right, moving past sports here. Let's get it. There's a bunch of stories this week. Why don't we start with the Sky Maker Rebrand? So this is something that obviously Rune has been teasing for a really long time, and this is a huge part of Endgame, which is the rebrand from Maker and DAI. So I think from Rune's perspective, those brands were a little bit confusing, and probably for something like a stable coin, we really wanted USD in the name. So there's been a transition. Maker is now Sky, and there's a redenomination there. So one MKR equals 24,000 Sky, I believe. And then one DAI equals one USDS. And you can very easily transition over. Maker and DAI aren't abandoned. You can keep your DAI or keep your Maker, but you can opt into this new system. And the benefit of holding, I guess, USDS versus something like DAI is that you're going to opt into or have the ability to earn all this additional yield coming from what were originally called sub-DAOs and are now called stars within the Sky. That's pretty cool. It's a little alliteration there, but yeah, what were your guys' takes on the unveil?
We've known this is coming for quite some time. We didn't know what the brand was, but we knew kind of the rough contours of the plan. I think the main thing is like this is the first step of probably 3 or 4 where the stars have their farming points. Maker goes cross chain. Maker goes both to the EVM and the SVM. And there's a bunch of different kind of RWA style plays that are also going to be happening. Like I think the linchpin of all of this is that like Maker is about to ship almost like 3 years of product that they've been developing. And it's going to drive more DAI into the system, which is going to drive increased, DSR, which is going to drive more distribution of the protocol itself, which will drive buybacks to the Sky token now. And the Maker token, to your point, still exists. Like, we have not transitioned our Maker tokens to Sky tokens yet. We will in time. But I think this is kind of like a burn the boats moment for Maker, where everything that they built and all of the lessons they've learned over the past kind of 2 or 3 years are culminating into this new brand and this new stablecoin. And, Maker and DAI will forever be kind of the uncensorable DeFi stablecoin that most people use. But USDS is going to be more of a USDC competitor. And, once more of these plans get revealed, it'll kind of make more sense. But Maker is coming for USDC. And the whole spirit of the plan is like, how do we grow this thing 10 to 100x? Like, there just was not any, maybe there's like a 2 or 3x in DAI supply growth that you could see just from the bull market kind of getting going and people wanting to use kind of DAI as like the degen box for farming. But in order to get to 50 to 100 billion of USDS supply or DAI supply, like this is kind of what needed to happen. So like Peanut Gallery on Twitter definitely chirping at the moment, but I think just check back when they're shipping product, and that won't be too far from now.
All those things I completely agree with. I think the other thing, frankly, that is just a little bit maybe it's obvious in retrospect, but it is something that I think matters a lot. It's just the brand convention. I think is something Sky with the different stars as constellations, and all of this coalescing around a universe of DeFi. I think Maker and DAI itself were two separate brands. And so you had double the work when you had to be able to try and promote both of them simultaneously. And so now having everything coalesce around a unified vision from a brand perspective, brand and marketing perspective, I think is a realization that Rune has said to us is like a streamlining of effort. And then on the point of going after USDC, keep in mind there are rules in the EU around MiCA, and being able to work within the confines of that regulation, I think, is going to be extremely important to get the distribution in Europe. There aren't going to be an infinite number of decentralized protocol stablecoins that can get there, but USDS with these upgrades will be one that can.
Yeah, I think that's a good framing as well of USDS competing with USDC, because as some folks noted on Twitter, there's a freeze function on USDS, and there's probably I would just guess that's a regulatory reason.
It's a requirement.
Yeah, more so than anything else. So,
but you can really go atomically from USDS to DAI.
So here is my you guys know way more of the backstory and the positioning of this than me, but it seems like Rune has basically looked at some of the success of USDT and USDC and tried to take what he can from that, but also layer on all of this additional stuff that you can only do with it's kind of the superpowers of DeFi, right? So leaning into things like yield farming, things like that. The way that he's structured, it seems like what he wants to do is put USDS at the base of this ecosystem of apps that are going to end up driving down and sharing some of the value. It actually looks a little bit Ethereum-like, right? You could either look at this and say, okay, this looks a little bit like if USDC could share some of the yield from the T-bills that they hold to holders of USDC, or you could look at it kind of similarly to what ETH is doing, which is, hey, we've got this money at the base of our ecosystem and an economy built on top of it, and that accrues value back to ETH. Do either of those analogies hit with you guys, or am I off there?
I think that's exactly right. Like, we're limited on what we can say, given that we don't want to front run Rune and kind of upcoming product announcements. But it is kind of like in our mind, it's kind of like this mixture of going after a combination of Circle and Tether, and having that be the stable coin of record for people that want the regulatory guarantees and to the extent that it exists scrutiny, but they're also able to use it for things on chain. And the other side of this is all the RWA plays that they're doing, and the $1.5 billion or $2 billion of T-bills that they're now portioning out to kind of non-Circle providers. And that will kind of drive higher yields just through, Circle right now just has such a commanding place in the market where they can say, we're only going to give you 4 to 4.5% on T-bills. But, that kind of relationship is also going to change as this thing gets more and more scale, which frankly will happen with the launch of the Star and Spark DAO, kind of whatever you want to call it, farming. And again, we know certain stuff about that, but there's going to be some really exciting stuff coming in the next couple of months.
The other thing I'll say about regulatory or taking this regulatory stance is that it's not just we're going to take the same thing that we've been doing and we're just going to have to conform to these new regulations. What it also unlocks is the ability to have it integrate into centralized financial applications. The equivalent of Venmo, with Revolut and Robinhood in the EU. Like, all of these types of integrations are only possible if you're blessed by the regulatory authorities as one of these assets. And so the reach, I think, is something that is differentiated once you have the regulatory blessing. And that it's not just a loss by conforming to all this stuff. You actually gain a lot as well.
Yeah. Fellas, can we talk about the video? Yeah, I don't know. We got to get Rune here some
Yeah.
high production equipment and whatnot. But yeah, there was some funny like, oh, is he being held hostage type thing? So maybe a little gentle ribbing for for our boy. But yeah, kind of funny announcement video.
Yeah, I mean, look, like, was the announcement video pretty funny? Yeah, it was kind of funny, but like, sure, like that's like the first thing that in like a series of products being shipped that are going to kind of really manifest this vision. And I mean, says something about the peanut gallery that, anytime you ship something on Twitter, they're kind of always up in arms.
You know what? Maybe the correct take here is that he got everyone talking about it. So in that sense, it was actually an extremely successful video, I would say. So
I talked to Rune on the phone yesterday, and he's like, "Yeah, it seems like some people really liked it, some people really hated it, but overall, we got people talking about it." Thanks for the fit.
actually, that is the truth. You just want people to feel indifferent about it. So I would
Right.
say, yeah, big success. So I know you guys are limited in terms of what you can say, but it would be cool to see. I think Spark was the first, sort of public subbed out. Now they've rebranded as Stars, and hopefully we'll see more as the year progresses. So yeah, shout out Sky, very cool. Hey everyone, this episode is brought to you by Namada, the shielded asset hub protecting the future of the multi-chain. Namada is a chain that's near and dear to my heart because in previous seasons of Bell Curve, we've talked about how the cardinal original sin of most blockchains is not thinking about privacy from the beginning, but also because if we want to onboard a whole bunch of applications, it doesn't work in a default transparency setting. So Namada not only brings about a better future that we all want, but it's going to help onboard a ton of new applications. So Namada introduces a novel shielding reward system. The way that it works is if you hold your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect rewards in return. Namada will initially support IBC and Ethereum-based assets, but eventually the idea is for this to expand into a comprehensive hub for all assets. Really, really excited about what the folks over at Namada are doing. I highly recommend that you go and check them out at namada.net. You can follow their mainnet launch, which is soon TM. Very exciting. Tell them that I sent you. Click the link, bottom of the show notes. All right, we should talk maybe on a slightly less happy note about all of the things that are happening in the Telegram ecosystem. So couple of things. So there was the indictment in France of the founder, Pavel Durov. And then also there have been a couple of outages on the TON blockchain, which I'd love to get your guys' take on. But I'm just reading from the Blockworks report here. So Pavel has been held in police custody. He was released from police custody, but he did get indicted. And the charges that he's facing are complicity in offering and selling narcotic substances and distributing child pornography. And I think 10 other charges as well. So French authorities allege that Durov didn't aid investigations. I guess he has been getting a bunch of messages from French authorities that, I guess he hasn't responded to appropriately. And yeah, I mean, I think there are a couple of different takes on this, which is, there's the sort of mainstream media take, which is this is a guy who's been doing all these horrible crimes. And then there's another take, which is this is, pretty classic censorship right here. And I would love to know like which side of the aisle you guys are falling on here. What do you think about all this?
I think one of the scariest parts of this is Pavel is not the only one who manages or runs extremely large social network platforms, communication platforms. And if he is the one that is not abiding by or not helping with authorities in their seeking out of all of this malicious activity, these are massive online communities, massive online platforms. There's always going to be nefarious stuff that happens on them, and you're not going to be able to be 100% secure unless you lock everything down. But what is extremely scary in my mind is what this implies is that everybody else is complicit and helping to backdoor, helping to gain access to authorities and regulators without the knowing of individual users. And so that I think is one of the questions that I have is like, okay, well, if Pavel is the one who isn't doing it, does this mean that everybody else is or has to be? I mean, I think we got a little bit of a sniff of this when Donald Trump went on X with Elon, and the EU commissioner sent this letter a couple hours before the interview, said, we're going to be watching and you're going to have to make sure no misinformation happens. And I think we're getting to a really kind of large question, societally large question, which is who's going to be the arbiter of truth, and how are we going to decide if that needs to be something that needs arbitration in general, or is this going to be an open platform? You have Section 230 in the U.S., which is a standard that says if you're not interrupting, or if you're not changing, or if you're not curtailing or create or curating any of the news, then you are a social platform and you can't be held liable for the information that's shared on the platform. Obviously, Section 230 does not extend to the European Union, but I do think that there are going to be very large questions as to the relationship of these social and communications platforms, the relationships of these platforms to users, and what role and what controls the regulators will have over them.
Yeah, I mean, it's crazy that those bureaucrats in Europe issued this letter after, one of the front runners in the presidential race in the US appeared on one of the most widely used social media platforms in the
It
world.
was before. It was before.
It's just crazy. I mean, there's just a general effort, there's just like a war on decentralization, from anything to the FDA wants to tell you what to eat and put in your body, to, social media platforms needing to have some sort of content moderation, to any number of things. Like, these institutions are just kind of trying to grab power. And I think it's overall bullish for crypto, because crypto is kind of the only thing that can really stand on its own and say, like, look, like, we are decentralized and here's how you measure it, and as long as one node is running the software, this is how it works. Unclear how we get to a decentralized social media network that has some sort of moderation built in, or if we can build something without it and the bureaucrats will be okay with it. But if I was Elon Musk, or if I was, even Mark Zuckerberg or the Rumble people, I can't imagine you'd be going to Europe at any point in the near future. And that's just so bearish for Europe. Like, imagine being one of those AI companies in France that's raised all that money right now. Like, you definitely have the regulators and government way up your ass. And it's just bad for entrepreneurship, and it's bad for the continent. And I personally, I mean, for me, I have sympathies for Pavel, and I don't know the full extent of the case and what exactly happened, but I think the here and now of, like, where does this leave Telegram is pretty interesting. And I was reading this Financial Times article this morning. Um, there's all this kind of, like, backroom dealings with Macron. Pavel's somehow a French citizen. He had lunch with him in 2018, whatever.
Yeah.
But Telegram, the company, has 50 people, apparently. Who knows if that's right, but they say they have 50 people. 30 of them are engineers. Um, they raised 1.3 billion in debt. 1 billion in 2021, 300 million in 2024, with an option to convert the debt to equity at the time of a Telegram IPO, as long as it's before March 2026. So the company is heavily incentivized to get this IPO off, because they won't have to pay back all this debt. Like, maybe that doesn't matter to them, but that's at least what this FT article was saying. And Telegram doesn't have a business model. They don't sell ads. I guess they kind of do microtransactions in the Ton blockchain, but that's kind of separate from now. But I would imagine their server bills are sky high. Like, if this is really being used by 900 million people globally every month, I don't know, what would their server bills be? 30, 40, 50 million a month, like something crazy. And then you kind of have now the main guys locked up. And it's like, you got the Ton blockchain that went down. I think that was mostly technical issues. You got Telegram itself, which may have emerging financial issues. And I was watching the Ton coin kind of bounce around. It was literally like a real-time prediction market on if he was going to go to jail for 24 hours or 10 years. And I think the jury's still out, but if he doesn't get out of jail in the next 5 or 10 years, Telegram could be in serious trouble. And I think by extension, the Ton coin itself.
You know, who actually kind of predicted this was David Sachs. Like, back in April of this year, I remember I tuned into All In every now and again, and he was saying, because this was around the time that TikTok was talking about getting banned in the US, and he specifically called it out on the podcast. He was like, the next one to go after would be Telegram. It's kind of like there's ties to Russia. It's also a social media platform. There's encryption on it. I mean, he was kind of right about that. And here, to your point, I mean, Vance, I want to respond to a lot of what you just said there as well. But to your point, Michael, first of all, when you Google this,
Yeah,
there's a couple things. First of all, are there more shirtless photos of anyone out there on the internet than this dude? like, no one has commented on this, but there's many like very well lit, professional looking shirtless photos of this guy. So, I mean, no one's commented on that. I feel like that's worthy of notice. But look at the title of the one story here that's above the fold. Telegram CEOs arrest Royals far right users in US. And this is just part of this trend of very frustrating gaslighting. There's this trend of very, I think it's completely valid to be worried about governments cracking down on what people can say and sending cease and desist letters to, Donald Trump and Elon Musk, who are just having a Twitter Spaces together. I mean, that's crazy. That's, we're not like thought police here, but that's clearly a slippery slope. That's not a fringe opinion. I think that's a very slippery slope. And it's in line with this whole, Liz Warren tactic of people are using cryptocurrencies for crime, and we're going to do price caps in grocery stores. I just feel like I'm constantly being gaslit at the moment. You know what I mean? Like, I know that. I know that doesn't work. You know that doesn't work. You know that I know that doesn't work. So why are you telling me this? There's a little bit of a rant, but it's just, I feel like that's the pervasive attitude from this one side of the aisle. It's too much. It's very frustrating. So,
well, Mike, there's only one answer: November 5th.
One last thing on it though, like what the FT. I mean, I had not heard this before, but like the IPO of Telegram itself, they're targeting a valuation of 30 to 40 billion, which is coincidentally basically the exact same valuation as the Ton coin. And like, is a Telegram IPO bullish or bearish for Ton coin?
It's a good question.
I mean, the details here are that, frankly, nobody, including investors in Telegram or Ton the token, have an idea of the details here, which is we don't necessarily know exactly how the blockchain works. It's not completely decentralized. Yes, it builds blocks, and yes, there's a block explorer, but it's unclear how that works. So it's unclear actually what happened when the software went down for 6 or 7 hours the other day. And we don't exactly know how many users are, in the 900 million that are supposedly on this Telegram blockchain. We don't know how many users are individual app users. We just don't have all of the information, which I think also has, if you're comparing this to even like let's say Elon Musk or Mark Zuckerberg were in the same position in France right now, there's far more key risk with Pavel as there would be with the other two, just given the size of the organizations. He has a lot more control. He has a lot more understanding. There was an article from a couple of weeks ago about how he was the only product manager that exists at Telegram. He is the product. And so if he's not able to be with his team, there's going to be real issues here. But I think we don't know what the ownership structure is. We don't know what the assets are. We don't know where the value will accrue in all of these ecosystems, whether it be the equity or the token. There's just layers and layers and layers of obscurity here, which makes it even more risky, I would say, just given the uncertainty. It is unfortunate given all of as we talked about, the societal risk and kind of the directionality that you can potentially look at with moves like this from the EU. But I think there's also in specific risk in Telegram the chain, in Ton the token.
The whole story, before we get into Ton the chain, it's a little bit of a larger than life story, isn't it? There are a lot of weird angles to it. First of all, apparently Macron is like a power user of Telegram, which I didn't know and think is kind of funny. And
not encrypted, Emmanuel.
Not encrypted. Yeah. Also, something that I actually didn't know this until a couple months ago, but I had always just thought Telegram was really well encrypted, and it's not at all end-to-end encrypted. So that's another dimension here around. I've heard people say if this was actually end-to-end encrypted and they decentralized a lot of this, maybe we'd get away from this. I would be curious about what your guys' take on that would be as well. But it's just a little bit, it feels a little funny. And then there's the whole story of how he ended up going to France. There was some crypto gal who
coach.
Huh?
She's a crypto coach. That's
crypto
what
coach. Okay. Yeah, like a guru or a life coach or something like that. whatever. But she, she took him to France. The whole thing just feels a little bit out of a movie or something like that. Like, was he getting honey potted there or something like that? Like, what's up with that? How did that happen?
From an encryption perspective, the closest comp here is going to be Signal.
Yeah.
But what you gain in encryption and privacy, you lose in user experience. And that's basically the trade-off that these two applications have made.
Can you explain?
Yeah, so Signal encrypts on the client side. So you have your messages are encrypted on your device. If you delete the app, you lose your messages. You have the ability to go and send messages, and those are encrypted client side as well. And so basically everything's encrypted on the client itself. Signal also has the ability for disappearing, but they also have end-to-end encryption. Signal can never know what information is being said, and Signal, the application, cannot understand what information is being said in an individual chat based off of the individual encryption of the user as well as the chat. Whereas Telegram, to make things easier, if you want to, and some of the user experience enhancements would be like adding someone to a thread and then being able to see previous messages, being able to have multiple layers of security where you can invite someone if they have the link, but they can't see it. I mean, there are just a number of ways that Telegram has enhanced generally the user experience, but in doing so, they have to maintain unencrypted versions of this information. It's the other one would be if you sign up on multiple devices, you can have a record of your chat, so you can be chatting on your desktop and then move to your phone, and it's the same chat the whole way through. Or you can have multiple phone numbers, but the same username. Like there are a lot of enhancements that make Telegram, I think, a very usable and actually seamless and amazing application. But what you gain with that, you lose privacy.
Okay. So yeah, just a bit of a. I didn't actually understand that whole trade off before. So it would actually be good to get. I don't know if you guys have ever connected with Moxie Marlin Spike, who's the Signal founder, but he would be good to chat with at some point. So let's talk about the TON blockchain here. First of all, I just don't know it. I poked around a little about this. It was tough to find a connection. I'm a little bit unfamiliar with the architecture of TON, the blockchain. I'm not sure how decentralized it really is underneath the hood. And there is a bit of a relationship. We talked about this, I think, a couple episodes ago in between, Telegram, the app. If you're not US based, there's a wallet and all that type of stuff. Like the UX looks entirely different than if you're, geofenced here in the US. And so there is a connection between the Telegram app and actually the blockchain. And actually the episode that's coming out on Bell Curve, the interview portion is this coming week is with Chow and Imran. So they run Alliance and they've got a lot of access to like very early stage founders. And there's been a lot of interest in building on TON, the blockchain, that we'll discuss there. But yeah, I would imagine that, it feels like there's some kind of connection in between Pavel's arrest here and the outages. I don't have anything to substantiate that other than that just feels like too much of a coincidence. But folks who are listening, please tell me why I'm wrong. And then do you guys think that there's any, platform risk? Like if you were building on TON right now, would you be concerned about everything that's going on?
I mean, probably worth covering like what building on TON actually means. And like the pitches that we've seen, one of them last week was it's a gaming platform. It's building kind of like, you can think about it as like a Farcaster frame within Telegram. But whenever anybody interacts with that frame, you're using an ETH L2 or an ETH sidechain or some other chain. And like your Telegram users, they're using your chain. You've built an app on Telegram, but TON has very little to do with it. And so I think our question about TON is like, to what extent are the users on Telegram proprietary to TON the chain? And where we're getting to on that is like, they're probably not proprietary. And so that's kind of an interesting discovery in the sense that, any blockchain user is open to be targeted or retargeted by any other chain. There's nothing proprietary there. It's there's still more questions and answers from us on Telegram and what its kind of future is. Sorry, TON and what its future is. I don't think the outages were actually related to him going to jail. Like apparently it was just a lot of a token called dogs being minted. But TVM has it's broken at 300 transactions per second before. So it's definitely not the best tech, and it's not kind of like a Solana or Polygon or an L2 style cost and fee base or throughput base. So TBD, but having the leader in jail when you need to kind of like answer all these questions, scale the platform, figure out how the Telegram app and the Ton blockchain are connected, and get the IPO at the door, and figure out how the token accrues value. It's like there's just a lot to do right now, and there's not a lot of people to do it, especially without the leader.
Yeah, I mean, wholeheartedly agree with all that, but maybe just to like steel man it for a second, and this assumes a lot of things, right? But I think there is an argument that could be made around if he were to be released, let's say, and I know he's on supervised release, can't leave the country, and who knows how long that's going to take. I have zero understanding of the French judicial process, but let's say he leaves, gets back to working. One argument could be made that this moves them further in the direction of decentralization, where a lot of the questions that we're talking about like Telegram the company, Telegram the token, Telegram the network, like what is it, and maybe this is just the catalyst that pushes them in the direction further of decentralization for all of the reasons that we're talking about: censorship resistance, having to be more clear. I do think in that point, if that is the best case here for Telegram the network, Telegram the token, I do think that frankly still begs the question as to, do these users know or want to be using Telegram the blockchain? There's 900 million users. How many of them actually are aware that there's a wallet in behind the scenes? How many of them actually want to be transacting on chain? These little Farcaster frames that exist are called mini apps within the Telegram ecosystem, and games have been popping off, as kind of the core category. But if you look at most of the games, they're basically clicker games where you try to tap as fast as you can, or try to hit it on the point. And we were talking to another game company who found the source code for developing these clicker games. And there was actually a $500 service that somebody had, where they would reskin the game, and it's basically the same core tech across all of these different games. And so the diversity of application categories is just not there yet. And I would say the user, to Vance's point, portability or understanding that they are on a blockchain as opposed to a Telegram application is really unclear and untested, unproven. So even if there was a distinct direction shift towards the blockchain, I think the major remaining question is, do these users, these hundreds of millions of users, know or want to be using a blockchain?
I mean, it's also the same question with what's going on with like Solana and Tron at the moment, where people are just moving from one ecosystem to the next, and you think about stickiness of users and of assets and of use cases, and what extent are they proprietary. It does feel like over a very, very long term time horizon, like getting people to denominate in your native chain's asset is probably the most defensible angle that you have of keeping those users as a persistent base on your chain, because there's always going to be new meme coins, games, apps, etc., and people will leave your chain. But it's just a matter of like, what money are they taking with them, and what kind of are they using the native asset on other chains, or is there any network effects from that? That's kind of a major open question for at least some of the emerging chains in the market in our minds.
I agree with that. I also want to say, by the way, about the speculation around is Pavel. I don't know anything. I think apparently it is more of like just a developer. The word that I've heard used is like a developer ecosystem and culture challenge there. It's a new chain that kind of prioritizes distribution over some of the tech underneath. So I have no knowledge of whether or not Pavel was arrested, just pure speculation. I agree, Vance, that I think that a huge portion of the way that L1s derive value is exporting their native token and getting people to denominate assets in that. So I actually think this is one of the things that L2s do super well. You basically export a bunch of ETH up into L2s, and then if you look at, they're kind of these like liquidity sinks, like Base and Arbitrum, I think are doing a really good job of this at the time being, at the current moment. What do you think about the role of like RWAs? I'm having trouble like circling the square actually, which is, if you have stablecoins have kind of been up only, but they sort of erode some of the network effects of getting, of denominating things in the native token. And when I really sit down and think about it and squint, it's hard for me to ignore the evidence in front of my face. Clearly, USDC and USDT and USDS are going to be super useful products. People want them. But from an end user benefit standpoint, it seems like you're losing a lot of the value of using a blockchain if really what you're getting is settlement assurances. So if I have an inbound transaction here, the blockchain's not going to spit it back out at me. You don't really have that as much anymore either, because that's getting choked off by the issuer can always just freeze you. So if you don't have the benefits of, it's not really a benefit to the network, like the RWAs kind of erode the network effects of the native token, and the user loses a bunch of benefit as well. How do you just think about the value proposition of RWAs and stablecoins more writ large? I feel like I'm just mid-curving this, but what do you guys think?
I feel like that's the other path for crypto, where the stablecoin is the dominant asset, and frankly, like, how do you play that? Things like Maker or other stablecoins with scale, and if you can export that USDS, that DAI, whatever you want to call it, and get people to denominate it in it, like, that is the holy grail of crypto business models. Like, you
Yeah.
use yield, or you use the stablecoins to invest in yield producing products. You use those yield producing products to buy your own token back, which pushes the price higher, which gets people, it's more reflexive, it's more interesting. Like, that is a very different view than like having a Bitcoin derive transaction fees from uses on chain, or ETH, EIP 1559, and trying to get people to denominate in DeFi and ETH. And I think it's a different path for crypto. I think to a certain extent it is cannibalistic to the underlying native assets. Like back in 2017, like everyone was trading pairs against ETH and Bitcoin on the major exchanges.
Mm-hmm.
I kind of wonder what it would still be like if that was the case. Probably a lot less efficient, but probably more people denominating in these assets. Um, and you can think about even the ETFs as kind of like this same type of L2 construct, where you're exporting the ETH or the Bitcoin to a brokerage account. People are denominating on that in a different form. So there's a lot of different paths to get there, but stablecoins are definitely one. And I think if you're investing in crypto in a serious way and you don't have an allocation to one of the major stablecoin products, it's just a path that could play out that would be very, very different than what most people expect.
Yeah, I think so. Yeah, I think that's really well said. Like, it's just something that I've been sort of thinking about, and it's probably not binary one way or the other, right? We probably get a world where the 5 or 6 native L1s end up working, or I don't know what your guys' thought is in the long run on that, and then a bunch of stable coins and RWAs, and there's some kind of mix, right? It doesn't have to be like a binary outcome one way or the other. But all right, last story I want to get your guys' opinion on is the SEC has officially come out and sued OpenSea this week. And so now we are officially getting, to paraphrase, in my own words, the opinion from Gary Gensler that digital Pokemon cards are securities. And the backstory of this as well, and why my heart goes out to OpenSea here, is because I think I would put them in the Coinbase bucket here for whatever mistakes they've made from a business model standpoint. I think that they did try to do the right thing and operate in the US. They had a really difficult decision a little while ago. When Blur was coming out and doing all these degen things to compete, they decided not to launch a token, which I know people really gave them a hard time for at the time, but I thought that was it was a tough thing, right? Like, at least it was a bold decision, right? You made a decision. And it seems like they tried to do everything the right way and they ended up getting sued anyway. And so, yeah, what do you guys think about this from a high level?
High level, it seems like the desire to about face and shift direction on crypto enforcement by action, regulation by enforcement, has really worked, and we've made these strides and moved in a totally new direction. In reality, no, it's just gotten much worse. Look, this is crazy. I'm very curious to see, and so what they've gotten so far is a Wells notice. They haven't received an official
Right.
lawsuit. It's usually the preceding indicator that you're about to get a lawsuit. We don't know the details of said lawsuit, so there may be things that they're going after that are I don't know, that are unobvious to the rest of the general public. My guess is they're going to be, you traded securities. Which ones are securities? Oh, well, which ones are securities. The whole back and forth dance that we've seen multiple times with these different platforms, and it's just brutal. It stamps out the desire for entrepreneurs to build in the U.S. To your point, Mike, it stamps out the ones that even with the most altruistic perspectives and the desire to toe the line and do the right things, they still get hit at the end of the day. This is the most restrictive administration that we've seen for crypto and crypto policy. And I think anything or anyone who thinks otherwise is trying to convince himself of something that's just not true. So we need it to change for this industry to proliferate in the US.
Yeah, the crypto pivot non-existent in my mind.
Yeah, I don't really. I mean, I guess you're absolutely right, Michael. It's a Wells notice. It's not a formal indictment yet, but it's, I don't know what the track record is of filing a Wells notice and then not suing. So
Near 100% is what follow through is.
So, so that's definitely happening. And NFTs were even, lawyers are very careful, right? And they always advise clients like be as risk averse as you possibly can. But I don't think there were many, even the crypto lawyers out there were saying, yeah, NFTs, there's not a huge risk that these things are securities. And there's actually an old clip here. I can actually try to find it. There's an old clip, Bankless shared it this week, about Gary Gensler getting asked in Congress whether or not Pokemon cards were a security. And then if you tokenize Pokemon cards, are they? He was like, no, Pokemon cards aren't a security. But if you tokenize them, I need to know more context. How does that make sense? Just seriously, how does that make any sense?
And they will probably lose this case if people are going to just use those arguments. It's kind of irrefutable, like baseball cards, Pokemon cards, collectibles.
In 1976, the SEC came out and said that even in the instances where art or physical collectibles are just being purchased for financial speculation or financial value, the brokers and the dealers and the institutions that are selling these assets are not, therefore, securities brokers. And so I don't understand why there's a difference between something that's physical versus something that's digital. Or there's a change in perspective from 1976 to now, but they're going to have to answer that when they go to court over this situation. So it's going to be a tough case, I think, for them to pull off a W, unless they're, like I said, unless there's some smoking gun that nobody knows about that's underneath the surface which I don't actually believe is real. If you remember, there were some issues with OpenSea and some people who were working there who were fired, and I think got in trouble because they were front running some of the announcements. I mean, they have been on the spot in terms of internal compliance, internal regulatory perspectives. This was a massive multi-billion decacorn level startup in the heyday. Like, it's not like they were fly by night, rinky-dink operation. They had all the resources to be able to put the legal team in the room and figure out what the best path forward was. But I generally think that this there must be something else going on here, or it's just the same as we've always seen. And anyone who's expecting change, sorry to say, it's not happening.
I saw there was a great tweet from Brian Armstrong, basically being like, "Hey, welcome to the club." It's like that guy, first time meme, exactly. So where are we gonna go? Because even I was thinking about this with the whole Pavel thing, but I mean, one of the biggest crypto conferences in the world happens in France every year, ECC, and I have to imagine that this is actually going to impact crypto founders' willingness to go over there and talk about their products, because it has in the United States. It absolutely has. If you look at, okay, so no one is going to get on this podcast and defend Do Kwon, right? But part of the precedent that was set by that complaint was he was talking at conferences about tokens and yada yada. And I mean, you have to imagine that's going to be relevant for France also now. So it's just like, where do you go? Where do you go?
Asia.
Yeah.
And hopefully the US in a year will be much, much different. But I think the prognosis for Europe is much, much worse.
Well, we're conflating situations here. There's the whole like Do Kwon getting served by the SEC at mainnet, like that was for unregistered securities offerings. What we're talking about with Pavel, I think, is a completely different subject. Yes, there are concerns around First Amendment censorship in general, compliance with regulators. That's a totally different subject than the crypto stuff. But I do think that there is a question as to what is the most friendly environment. And to Vance's point, we hope that it's the U.S., but right now it's definitely not.
Yeah. I mean, agreement. Yeah. I think that it's I saw, I can't remember. I think it was maybe Victor Boonin who tweeted this out. I can't remember the exact phrase that he used, but this is just part of the strategy of, I think the SEC doesn't even expect to win this lawsuit necessarily. Not a legal scholar, take this with a huge grain of salt. But what you're effectively doing is setting the company back because it's a massive distraction. The entire executive team is going to be focused on this now. How are you going to execute on product roadmap or whatever else you're doing if you're footing huge legal bills, and there's so much on the line here, not only for the company but for these executives personally, I would
Well,
guess.
and it's sad to say, but OpenSea has taken a pretty big hit over the last couple of years.
Yeah.
From the volume numbers, or the change in strategy. And I think also they raised at a $13 billion valuation. I think their secondary market was trading somewhere below $1 billion. So they've taken a massive hit in terms of the capital structure of the company as well. But broadly, what I would say is I think that this is in an unfortunately nefarious way. I think this is the SEC also picking on someone who they think that they can push over because of the direction of where the company is going. And it'll be a win for the SEC if they settle. It'll be a win for the SEC if they don't look like they're arguing or fighting, versus someone like, I don't know, a Uniswap or a Coinbase who is thriving and who is pushing new all-time highs and who's ready and capitalized for a fight. And so I think there's just a difference of, maybe this is a less toothy kind of case, but it's probably going after a more willing and able, a less willing and able, defendant.
And if there's a new administration in 4 months, this is somebody else's problem.
Right.
Yeah. I got drinks with a former regulator this week, actually, and he mentioned that even within the SEC's office, there's a ton of burnout and churn. I don't know if you guys saw this guy, David Hirsch, who is pretty high up within the SEC, the crypto division. He's gone to a law firm. Okay, here's a question for you guys. I've actually talked to Dave before. I actually thought he was a completely fine guy. But how do you feel about these former regulators then going into private practice and kind of being on the enforcement side of things?
My favorite example is Ben Losky. I don't know if you remember him.
The author of the BitLicense.
He's the guy. He's the guy who
ever
license.
And has Yano ever told you his Ben Losky story and Andrew Cuomo story?
No.
I don't know if I can tell this on the podcast. It's a pretty funny story.
We'll save it for permissionless, where we do the meetup in person.
Yes, exactly. It's the alpha you got to come for.
But yeah, a little plug there. But no, the Ben Losky story is he started, the BitLicense, the most incredibly onerous licensing structure to be an operator of digital asset services within the state of New York. Leaves the financial regulator in New York and immediately starts a law firm and consulting firm to help people understand how to get bit licenses through the process. So you create the mousetrap and then you lead people around the mousetrap and get paid for it. It's pretty insane that this is how the system works. And I wouldn't be surprised if there's going to be a number of crypto enforcement people at all of these different regulators who then go and join law firms who help all of these companies that they were just trying to enforce work with or get around the enforcement that is being put down by the regulators. It's all circular.
Yeah. I mean, it definitely, the Ben Losky one seems particularly beyond the pale in terms of that just shouldn't be allowed. And the cost, what's the cost for getting a bit license? It's in the tens of millions or something, right?
It's in the single millions. It's insane.
Okay. Yeah. So yeah, that just feels not within the spirit of the law as it is. That's probably intended. I guess maybe just closing out, actually, just as we're talking about OpenSea, what are your guys' thoughts on NFTs long term? It's been a while since we checked back in on this. This was probably, we should go back and review our prediction episodes going into the year. This was probably my worst prediction around NFTs in general. That one aged like freaking milk. But yeah, what do you guys think on the NFT front? Are they just dead? Do you think they're going to come back in a different way? Or
look, if you're a fan, they're on sale.
Yeah. If you liked him at 100 grand, you'll like him at 10.
I saw that the punks floor got swept and was kind of moving in the right direction for a little bit. I think there's a lot of forced sellers of NFTs, especially the high quality ones, just from the crypto funds that were like NFT funds for a while. Like they're still looking for liquidity, but that will pass. And I think the highest quality ones will do well. I don't think they'll do quite as well as the native assets, but I saw a hieroglyph yesterday that was listed for an autoglyph for under 100 ETH, and then someone bought it kind of right there, and like it took like an hour. So I think there is some life to it, but I feel like AI damaged a lot of these 10,000 PFP collections. Like when you can create one of these in 5 minutes, like who gives a fuck? That one's tough.
Yep.
Also, meme coins. Meme coins just really ended up eating that whole market, right? Like that's the other thing too.
Well, we should check back on meme coins in a couple months, but doesn't look much better for them at the moment.
Got Murad coming on the podcast. I don't know if you've seen his tweets. He's very bullish. So we'll get the. I mean, we've talked about it on this podcast. There's just too many of them. They're eventually going to collapse underneath the weight of that supply. It was really the pump.fun was the. There is a history of this. There is it's the whole did Blur kill NFTs? It didn't kill NFTs, but there was a very specific game that was getting played based on how much liquidity existed. And if you give all of a sudden this massive incentive for everyone to sell at the same time, people are going to sell. So this happened with Sushi Swap and Pool 2s, and then it happened with Blur, and it happened with Pump.Fun. And yeah, there's probably a pattern here to take note of.
Oh, yes, of course.
Yeah. All right, fellas. This is a good one. I think we can call it here. See you guys next week.
Thank you.
Hey, everyone. Hope you all enjoyed today's episode. Want to give a final shout out to Namada. Again, a team that is near and dear to my heart. They are building the Shielded Asset Hub, which is protecting the future multi-chain. Talked a little bit about how that works in the mid-roll, but for now, what I would highly recommend that you do is go check them out. They're in their mainnet launch phase. You can follow along with everything at namada.net. You can start rewarding yourself by shielding your actions and strengthening data privacy for all across the multi-chain. So thanks again, Namada, for all the great work that you're doing.